Hi, welcome to Mark in a Minute. So, the big question, what to do now? So, we got the 10% decline we were looking for. We got a little bit of a bounce. The technicals are trying to hold in there. We're looking to see how far this could bounce back up. And we think we're not out of the woods yet. We think maybe we retest the old low, maybe come sometime in September. So, and we also have a really good update on some of the biotechnology stocks we like that we promised. The market outlook. Okay, so we got the 10% pullback, bounced about 4.3% off that low on August 5th. That was really some big low on August 5th. That was really interesting. The valuations of the stock market on 2024 earnings is 22 times. So that's high. And 19 times next year's earnings if the earnings come through. So if you look at the blue wings here from Ed Yardeni, you can see if we're 22 times, we're in that upper band, and then 19 times, so in the second band down, if if we do hit those earnings expectations for next year. So on a valuation basis, we think we're still 10% overvalued, even with the pullback in the markets and the lower yield on the 10-year Treasury. We still think we're 10% overvalued. On 2025 earnings, we're 5% undervalued if those earnings come through. So the economy has been slowing. We do think that there is a possibility of a recession. We think the economy is slowly slowing down, and we think unemployment rate will continue to rise. Maybe not up on the next monthly report, but it'll probably rise as we go through the year. So we think it's likely that the Fed will start cutting interest rates. But the question mark is, how does 2025 look? If 2025 is okay in terms economically, the market has some upside to it now. And some of the tech stocks have pulled way back. Some of those look pretty interesting. And I have to say that, the antitrust ruling on Google went negative, but I really actually think that's an actual positive for Google, as they won't have to pay Apple $20 billion a year for their platform. So regardless, we think the market will start broadening out. So we do think the mega cap technology stocks will grow slower next year, and the other stocks will grow a little bit faster, barring a really nasty recession. So we like the broadening out theme of the overall markets. We really like blue chip stocks. So looking at the yen carry trade. So the big question is, or maybe was, how much money was put against that yen carry trade. So what people were doing is they were borrowing in yen, cheap interest rates, and then buying other assets like the mega cap technology stocks. So the estimate that we've heard this past week was $4 trillion went to this trade, and that it's all gone. It's not there anymore. It all got unwound. Well, we call BS to that. You just don't unwind $4 trillion, and someone's head would be handed to them somewhere out there because someone lost a lot of money. So that's going to resurface at some point. So August, September tend to be really tough months. They're still here. So we think that this tough market will continue for another month or so. And we may retest that August 5th low. Geopolitical risk, they keep going higher. So we think that the Middle East looks like a disaster. Ukraine, kind of at this point, looks like they're beating Russia. So we'll see how that plays out, what response Russia has, and who knows about Taiwan. Maybe nothing happens there. Okay, on the Federal Reserve cutting interest rates, we now think that the Federal Reserve will cut by 1.5% by the end of next year. So we were correct to be skeptical all along last year that the Fed would immediately start cutting interest rates, and we knew that was wrong. And we just didn't want, the market to think that way, because if they did, we wouldn't have that big rally last year. But anyhow, we now think that the Federal Reserve will cut interest rates, and maybe it's more than what we currently expect. Our favorite themes right now are blue chip stocks. You got to buy the blue chips. Okay, the blue chip stocks are undervalued. Even with a pullback in the economy, we still think that they're attractive. And what our plan is to sit back there and pick them off as the economy weakens or in this seasonally weak period. We want to pick off these blue chip stocks because there's great value in those names. And then small cap stocks will be the big winners once interest rates really start coming down, the economy starts to improve. Big upward move in small caps. And we can see the biotechnology stocks, small cap biotechnology, should do really well when the Fed begins cutting their interest rates. They are not economically sensitive. So when the Fed starts cutting rates, we can see those move up nicely. And technically, the whole group's looking really attractive at this point. So what we're watching the 100-day moving average, which is here in yellow. So we have this short-term downtrend, right? We broke back above that short-term downtrend, and we're above the 100-day. If for whatever reason we break through the 100-day, we think we're going to test the support level at about 5,200 on the S&P, but ultimately likely come down to 5,000 on the S&P, which is the 200-day moving average. So again, broke through that short-term downtrend, staying above the 100-day. So we're watching that really closely. We took some of our hedges off last week and are looking to see if we can maintain these current levels and move higher. I mentioned the dollar yen. You can see how much that's pulled back. So the yen has rallied about 11% from its high, but over a year plus, 2-year period here, the yen really lost in a big way, and that's why it made that trade so compelling. And it seems like it's getting unwound. The yen dollar trade, okay, so the yen carry trade correlates really highly with technology stocks. So that's where that money went. You can see it, the correlation between the two. So just keep that in mind. If there's more to come on that yen carry trade, it's going to take down the tech group more. Wednesday, we get CPI. So we're expecting that up about 0.2 on CPI on Wednesday, and the year over year to be up about 3% year over year. I think if it comes in with these numbers, 3% or less year over year, I think it sets up the Federal Reserve to cut rates in September. And I think, just generally speaking, I don't think the Federal Reserve really has a 2% target. So if CPI does not come in as expected, if it comes in higher than expected, so say it's 0.3 or 0.4 instead of 0.2 as expected, you can take off the Fed cut in September, and I think the market would continue to go lower and then probably test that 200-day moving average. So we're kind of in a tricky situation here. The retailers, start to report this week. Home Depot Tuesday morning. We don't think a good report's going to come. We think most likely flat to down earnings and negative comp store sales. Walmart, we think, is taking market share from everybody. So they're probably one of the few that will show positive earnings and positive comparable store sales of about 3%. Tough environment for retailers. The biotechnology stocks. So again, this is one of our favorite sectors. Our favorite stocks are staying up very nicely. So Veru, this is the muscle retention company. So Veru keeps your lean muscle mass when you're on GLP drugs. So if you're on these obesity drugs, this is really interesting. If you're over 60, it's very dangerous to lose a lot of muscle mass. If you're even young, you don't want to lose your muscle mass. So they reported earnings. Phase 2A is on track. We expect to get that data in January. So expect the trial to be over in December. The trial is fully enrolled. They got more people wanting to use it than what they expected. We think the trial's set up to have positive numbers, to have a positive outcome the way they structured this trial. So we like Veru a lot here. It's like a call option, only trades for less than $1 a share, but this could be a $10 stock. We think they're going to find a partner and or sell the company after these phase 2B results, again in January. Checkpoint Therapeutics, okay, their oncology drug, better than Keytruda in our opinion, but it's for a small indication. Looks like December 28th they will have that drug approved or reviewed by the FDA. So again, big upside in Checkpoint. Journey Medical just reported, and they reiterated their November 4th rosacea drug approval. That's the date the FDA will likely approve that drug. Great data. We like that one a lot. And then Grail, this one is a bigger market cap than the previous three I just mentioned. But again, to repeat myself a little bit, this is a company that was spun out of Illumina. Remember, Illumina bought them for $8 billion. The stock trades for 500 million market cap. So 8 billion, 500 million currently, and they have $1 billion in cash. So they report Tuesday after the close. If you have time, go onto the call. I think you'll find it really interesting. So they'll talk about what's going on with their cancer diagnostic tests that finds over 50 different cancers in early stage. So this is something that many Americans need and will likely be on it. They need to get approval by the FDA though, and that will be sometime in I believe 2026. So just keep that in mind. But they're generating $100 million in revenue currently. The market size for this is just enormous. So what's happening is that the shareholders of Illumina, generally large cap, growth managers or large cap biotechnology funds, are selling the stock, and we think by the end of the quarter they'll be out of it. So they will not want to report that on their shareholder reports. So this is the first earnings report out from the newly spun out Grail. I'm really looking forward to hearing what they have to say. So thank you very much. Quick update on everything. Again, watch that 100-day moving average in yellow. And we're looking forward to football season now the Olympics are over. And I got to say, the 400-meter men's was the most incredible race I think I've ever seen. If you haven't seen that, go on to YouTube and take a look at it. It's just awesome race. Thank you. And if you have any questions, come to my website, Patrick Adams CFA. Send me an email with your questions, or just ping me back on the YouTube channel as well. Take care.